If you live in Canada, then I think it's really important that you check out what Macklem just said, who's the head of the Bank of Canada. So Bank of Canada, head of Macklem, came out recently, cut interest rates by 25 basis points, and said something that every Canadian should hear. So I'm going to play the video because he says it best here, and you'll see what I'm talking about.
Fortunately, what that means is that unless something else changes, our incomes will be lower than they otherwise would have been. They'll grow, but they'll grow along a lower. This was the old path. Now there's a new path, which is below the old path. There are things the country can do to try to bend that curve up, but those aren't things monetary policy can do. These are more structural changes. I mean, fundamentally, as a senior deputy governor has hammered many times, we need to get our productivity growth up. And if we can do that as a country, we can bend that curve up. So, I mean, I think what's most concerning is that unless we change some other things, our standard of living as a country, Canadians, is going to be lower than it otherwise would have been.
Listen to that again. What's most concerning for the head of Bank of Canada? Let's repeat that one more time.
So, I mean, I think what's most concerning is that unless we change some other things, our standard of living as a country, Canadians, is going to be lower than it otherwise would have been.
So standard of living in Canada is expected to be lower than otherwise, unless we change something. And what is that unless we change something? That unless we change something is the productivity in Canada. And he's not wrong. The productivity in Canada is pretty garbage. And we're not seeing the growth and the productivity in Canada. Thus, you can't offer the higher prices, the higher wages, right? Think about it, right? If your productivity is low, and you're not working as much, or there's less people working, or you're not producing, the ROI on your production is not high, or the quality of it is not high, or you can't really sell much for the country, and it's not at a level that can withstand the asset price inflation, the regular inflation, the cost of living going up. If that's not high, if that's not going up to a level that's matching these inflation levels or above, then yes, you're in trouble. The cost of living is going to be worse. The living standard is going to be worse. Thus, other countries that do have high production levels, higher productivity, can produce. I mean, if you look at the US, for example, a lot of the big tech firms spending a lot of money on AI, growing their businesses and growing the capex and spending on data centers, trying to make it more efficient, more productive. And if we're just sitting there on the sidelines not doing much, and the productivity is not growing up, then yes, inflation will continue to rise. Things will get costly, especially with trade wars that are happening right now, especially with a lot of the tariffs that have heavily affected Canada and continue to do so. So pretty big concerning things, that were mentioned by Macklem here. And I thought it was really important to bring this out. Now, we've cut rates in Canada by a lot, and Macklem and the head of the Bank of Canada did cut interest rates recently on Wednesday, but cautioned that whatever they're doing. So you might have heard, right? Doug Ford, right, in Ontario, complaining to Bank of Canada to cut rates. Okay, fine, they did it. They've cut rates by a lot, and I'll show you as I scroll down by how much. But he basically said, listen, we're cutting rates, we're doing what we can, but we can't do anything because one, right, a lot of the immigration that's coming in, it's not supporting the productivity, the growth in Canada that it needs. to outpace the higher cost of living, the inflation, the trade wars, and whatnot. And if that's the case, then sorry, whatever I'm doing with rate cuts is not going to fix, because there are structural economic damage. And that structural economic damage, which we heard from Macklem say this, if you're following me on this channel many months before, I mentioned that the structural economic damage, he mentioned this before, caused by the trade war. And since this trade war is still going on, and since Macklem mentioned it, he's basically telling you that, sorry, can't do anything about it, we're doing our best, and this structural economic damage is long-term. So cut rates as much as you can, but the damage is there, and it's going to affect a lot of the consumers when it comes to hiring, when it comes to job losses, right? A lot of the immigrants that came in were hoping for quick jobs that they would get, and they would make a lot of money. A lot of them are deciding to leave and go back because the situation in Canada is not looking as rosy as they thought. The locals also feeling the pain, possibly also losing their jobs, or even with the cost of living of the prices, the grocery prices, the commodities and whatnot, the mortgage rates, the rents, the shelter cost in Canada continues to be high, no matter what the government promises, that we're going to lower prices and this is going to happen and that is going to happen. I mean, just look at the Toronto condo market, completely getting wiped out. And that was due to the demand. I mean, what happened to everyone who was saying that when we cut rates, the real estate market's going to do well? Well, guess what? Daniel on Infravest was saying for many times. Just look back to my old videos for a year. Don't think that those rate cuts that you're going to get is going to be really truly good for the economy. We're in a different economy. Rate cuts does not mean all of a sudden everything goes to the moon. Real estate booms and to the moon. Markets to the moon. Although, yes, the stock market and the Toronto Stock Exchange is actually doing better if you look at it. All-time highs there. It comes down to the K-shaped economy that I was talking about in my previous videos and multiple times before. Certain sectors will do better. But Canada's heavily focused on this real estate market. A lot of people are heavily invested in it. Governments have their interest in it. They do take advantage of taking taxes from it as well. And that has slowed down significantly because of post-COVID, because of what happened during COVID, right? Is that all that money printing and all that stimulus that went into the economy is now being has been drained out. And now you're feeling the hangover effect from all that parties and all those stimulants that the economy and that people had. All of that amazing good stuff, you're feeling the hangover effect now. And this is the result. And this is literally the result. Now, on top of that, to add more fuel to the fire, is the trade war. And Macklem said, if this happens, right in the beginning of the year, Macklem said, if this happens, Canada will be heavily affected. And he said, this was his words, okay? This is not my words. Everything I'm telling you right now was this guy. He said this, okay? Not me. He said that it will be very difficult for Canada to come out of this. It will take a very long time. It may not even come out of it if this trade war goes through. And basically, right there, that video I showed you is him throwing out the white flag, saying, sorry, I can't do anything. I give up. Surrender. And there you go. I'm not trying to be doomsday. I'm not trying to be negative. There's sure a lot of good things about Canada as well, and definitely the opportunities for growth can be there. I mean, just look at the Toronto Stock Exchange continuing to move up higher. higher commodity prices, and when the government also changes the way it does things as well, can which I can talk about it later, but can benefit from. But as of right now, with everything that you're seeing, don't be confused or misled by information from others telling you that, hey, rate cuts are have happened and we're going to get more rate cuts, therefore we're going to see a massive boom. Untrue. False. And if you don't believe me, let's scroll down, right? Let's scroll down and let's talk about the rate cuts. Look at this. 5%. Right? We've cut rates by 50%. We're down to 2.25%. They've cut rates. There you go. 50%, half the move. So where's this boom that people were talking about, that the realtors were talking about, that the loan officers were talking about, that everyone was promising you about? Where's the boom? Except Daniel on Infovest was telling you there's no boom. Don't expect the boom. Expect a different boom, which is the other way around. A big explosion, I would say. That's the boom. Knock on wood, doesn't happen. I don't want anything negative to happen to anyone. But I've been talking about this on this channel. Now, other economies like the US have been more resilient than Canada. Yes. But Canada has been, and I've been saying this before, Canada has been under trouble for quite some time, and we're seeing the proof now. Now let me tell you another thing, okay? So, Macklem did mention somewhere here that they're deciding to hold on the rates and suggest that it's done cutting rates for now, and says that depending on inflation, we'll decide to adjust rates accordingly. So they're on hold now. Okay, he's giving you half those rates back. He's cut them in half. We're 50% down. But you still wonder, why is my mortgage rate high, and etc. That has to do more with the bond yields that continue to be high because of expectations of growth and inflation down the road that could see a tick up, especially for Canada. What I suspect is two things. Either if inflation really gets worse off, either it will hold for some time, maybe tick up, but I don't think the tick up will happen. I think the next move will be emergency rate cuts. I think going forward from here, you might get a rate cut here and there, but I think in Canada specifically, because the US has been more resilient, but Canada specifically, I think you will get emergency rate cuts where this 2.25 will drastically cut in half or more. And that will have to do with some sort of recession, some sort of economic crunch, especially if this trade war goes on, and especially if there's a lot of job losses. I mentioned that weak growth is expected, right? Let's scroll down also a little bit here. Does hint towards that trade conflict is having severe effects on tariff hit sectors. Certain sectors are more affected. Auto, steel, aluminum, lumber. GDP growth is expected to be weak in the second half. That's what the Bank of Canada said, Macklem. Now, there was a question about recession. Now, let me tell you one thing, okay? Central banks will never tell you, yeah, bro, recession's coming next month. Get ready, bro. That never happens. No one does that. No central banker will come and tell you that expect a recession. So here's the answer of what they said. Whether the bank thinks Canada will avoid a recession in 2025, Macklem said that the central bank continues to expect modest growth. Don't worry, modest growth. No recession there. Don't worry about it. Okay, Macklem. But he emphasized that whether the economy sees a slight pickup or a few quarters of negative growth, that's a recession, bro. Canadians are not going to feel very good in either scenario. No recession, bro. But either way, you're not going to feel good. Sorry. Whether we get modest growth or a couple of quarters of negative growth. Couple of quarters negative growth is recession. Okay? According to the definition. This annoys me because you get the point. You see the picture here. This annoys me because I've been saying this for some time. A lot of misled information, and it's happening now. And I suspect, sure, I can be wrong. I'm not perfect. I'm not saying I'm Nostradamus, or I can predict everything. That's not that. No, wrong. That's not true. That's not what I'm trying to say. But when I look at data, I study this and I look at this. When I look at data, past data, historical trends have been that when you see this, one step, two step, rate cut, rate cut, rate cut, pause, rate cut, and then another pause, eventually, we have seen in history, we get the emergency rate cut due to recession. And look at this article here. I'm just showing you right here that he tells you modest growth, but don't expect it's going to be good, and that you could get several quarters of bad GDP, which is recession. But they'll never say it out blank there, and says that expected job losses, trade war, etc. It's right there. It's all there. Now, what you want to do with this information is up to you, whether you want to believe it or not, whether you want to hate on me in the comments and say, no, you're wrong, and blah, 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 I still don't believe that's true. You're free to your own, you're entitled to your own opinion, okay? I'm just reporting the news here, and I'm giving you my 2 cents from looking at this often. And it annoys me a little bit that the false information is being glorified, and people are being blindsided from it. So my point of this video is to not get you blindsided about it, is not to fearmonger here and be all doomsday. It's to get you prepared if it is to come, recession, anything bad. Just prepare. Just have some safety net there. Just get ready. Prepare. Start doing things. Whether it comes, whether it doesn't come. Trends here, and from what Powell is saying, I don't like it. Now I feel weird about this. Right? And I've been saying this on this channel for some time. Anyways, those are my 2 cents. Do as you feel, as you wish. Subscribe. Hit the like button. Bell icon to be notified next video. Comment below, let me know what you guys think, and I'll see you around. Cheers. Bye.